So here's the big question, right? What really makes the difference between a trader who's consistently making money, month after month, and someone who just seems stuck, always chasing the next strategy, always? Well, losing.
Yeah, it's the million-dollar question. And most people, they immediately think, okay, it must be better software, maybe some secret indicator, or I don't know, maybe even inside info.
The external stuff.
Exactly. But Dr. Brett Steenbarger, who's both a psychologist and an active trader, he offers this fundamentally different perspective. He basically argues the real fight isn't out there in the market data.
Okay. Where is it then?
It's all internal. It's about mastering your own mind, your emotions, your mental state. That's the battleground.
Ah, okay. That's the core idea we're really digging into today. We're doing a deep dive into Steenbarger's framework because it kind of flips the script, doesn't it? It's not about finding the perfect system.
No, it's about mastering yourself. And the really crucial idea, the big shift, is how he sees the struggling trader, not as like a patient who needs therapy for deep-seated issues, but as an elite performer. Think like a top athlete, maybe a concert musician, or even a high-stakes poker pro, someone who needs specific coaching to hit their peak.
I like that framing, an elite performer. It changes the whole dynamic.
It really does. And what's so compelling is that Steenbarger isn't just some academic watching from the sidelines. He's actually trading. He's in the trenches.
So he gets it from both sides.
Precisely. So our mission today is basically to unpack those key mindset shifts and, importantly, the really practical techniques he talks about. We want to hand you, the listener, kind of the manual to become your own trading coach.
Okay, let's start with that first big shift then. Moving away from that traditional therapy idea towards this coaching model. So if I'm struggling with, say, revenge trading after a loss, traditional therapy might have me looking way back, right?
Yeah, exactly. I might ask, why do you feel this need for revenge? Where did this pattern start? Childhood, that kind of deep dive into the past.
This might be useful generally in life, but maybe not when my account is bleeding now.
That's Steenbarger's point for traders. While that historical analysis has its place clinically, it's often not helpful, maybe even detrimental, for improving trading performance right now. Trading is immediate. It's under pressure.
Okay.
So the first big shift he pushes for is, metaphorically speaking, getting off the therapist's couch and onto the practice field. You stop focusing so much on why you have these patterns.
And start asking.
Start asking what you can do about them.
Yeah.
Now, in the present, it's completely solution-focused. It's about action today.
That makes sense from an efficiency standpoint. If I'm losing money, I need something I can do differently on the next trade, not necessarily a 5-year psychoanalysis.
Right.
But how do you make sure this self-coaching isn't just, I don't know, wishful thinking, like be positive? How does it become concrete and actionable?
Great question. It becomes actionable because it's structured around 3 very specific, present-focused questions. This isn't about just feeling good. It's about building a better process.
Okay, what's the first one?
First, what is working for me right now? You actively look for the positives. Identify the trades you handled well, the decisions you made correctly, the times you managed your emotions successfully. Start with strength.
Huh. Okay, focus on what works first. That feels constructive. Different from just beating yourself up over mistakes. What's number 2?
Number 2 is about amplifying that success. How can I do more of that? So if your pre-market routine on Tuesday helped you stay disciplined, how do you make sure that routine happens every single day? Systematize the good stuff.
Right, replicate what works. Makes sense. And the third question, you mentioned this one might be the most powerful.
Yeah, I think it really is. It's, what are the exceptions to my problems?
Exceptions, what do you mean?
So let's say your big problem is impulsive trading. FOMO gets you every time, instead of just dwelling on all the times you jumped in too early and lost.
Which is easy to do.
Very easy. You actively search for the times you felt that FOMO, you felt that urge to jump in. But you didn't. You held back. What was different then? Did you have a checklist? Did you take a breath? Did you walk away for a minute?
Ah, I get it. So the exception proves it's possible to act differently. It holds the clue to the solution.
Exactly. It reframes it. Instead of, I'm just an impulsive trader, it becomes, okay, Under these specific conditions, I was able to resist the impulse. How do I recreate those conditions more often?
That's much more empowering.
Totally. And think about that athlete analogy again. A good basketball coach, after a player misses a free throw, doesn't usually start asking about their childhood relationship with hoops.
No, they look at the mechanics.
Right. They analyze the successful shots, what was the elbow doing, the follow-through. They find what works and they drill that. Build the muscle memory for the correct action.
So traders need to do the same for their mental and emotional form. Build that behavioral muscle memory.
Precisely. Because you need that muscle memory when things get stressful, when fear kicks in.
Okay, speaking of fear, that leads us perfectly into the next bit. These predictable failure patterns. Steenbarger says most trading mistakes aren't random, right? They tend to be these repeating destructive habits.
Yeah, they're like emotional quicksand. Patterns driven by really core human emotions. He highlights 4 main ones. Let's call them the 4 horsemen of trading failure.
All right, let's break them down. What's the first horseman?
The first is probably the one everyone knows or has experienced, impulsivity. This is almost always driven by FOMO, the fear of missing out.
You see the price running and you just got to jump in.
Exactly. Adrenaline spikes, you throw your plan out the window and you chase the move because you're terrified of missing this big winner. Usually leads to buying high.
Or selling low in a panic.
Oh,
Okay, impulsivity was number 2. This one sounds a bit more subtle.
It is. It's perfectionism. And this is driven by a deep-seated fear of being wrong. The ego just can't handle taking a loss or making a mistake.
How does that play out? It sounds like you could look like discipline, waiting for the perfect setup.
That's the insidious part. It can look like discipline. But this trader is often paralyzed. They're waiting for that absolutely guaranteed 100% perfect trade.
Which never comes.
Never.
Yeah.
So they miss good, high-probability opportunities because nothing is ever quite perfect enough. They sit on the sidelines.
Okay, but what happens when they do get into a trade? Does the perfectionism hurt them then too?
Oh, absolutely. Because their fear of being wrong is so intense, they can't handle normal market fluctuation. A winning trade pulls back slightly.
And they bail.
Instantly. They snatch tiny profits because they're terrified the market will turn and prove them wrong by taking back the gain. They can't psychologically accept that losses or seeing profits fluctuate are just a normal part of the game.
Wow, okay. That's tough. Horseman number 3.
This is generalized fear and anxiety. This is the trader who just freezes. They might be great research, identify a solid setup, know the odds are in their favor, but they hesitate. They just can't click the button.
Analysis paralysis, basically.
Pretty much. Or if they are in a trade, any normal volatility, just the usual market noise, is enough to spook them. They get shaken out of perfectly good positions because fear just clouds their judgment entirely.
Okay. And the last one. You said this one is maybe the most dangerous.
Definitely the most explosive. Anger and revenge trading. This usually kicks in right after taking a loss, especially if it felt unfair or unexpected.
The market feels like it personally attacked you.
Exactly. You feel wronged, you feel like the market took something from you, and you get this overwhelming urge to get it back immediately.
Which leads to
Massive, reckless trades, way oversized positions, ignoring risk rules, basically gambling to try and instantly recoup the loss. It's almost always a recipe for digging a much, much deeper hole.
Yeah, that analogy you mentioned, like hitting a slot machine after it takes your money. It's pure emotional reaction, zero strategy.
Totally reactive. The market doesn't care you're angry. It'll just punish the recklessness.
Right.
So the critical thing here, obviously, is you can't fix these patterns if you don't know which one or ones you're prone to.
Right. Diagnosis first.
Diagnosis first. And the primary tool for that, it's journaling.
Yeah.
But not just any journaling.
Okay, because lots of traders keep a journal, right?
Yeah.
Entry price, exit price, profit or loss.
Yeah.
What's different here? How do we make the journal a real diagnostic tool?
It needs to go way beyond just the numbers, the accounting. You have to track the psychological and emotional data surrounding the trade.
Like what specifically?
Like when you were thinking about entering, what was the main feeling? Was it calm confidence based on your plan? Or was it anxiety, excitement, maybe even boredom? Was the trigger seeing the price bolt FOMO? Or was it your predefined setup condition?
Okay, tracking the why behind the entry.
And crucially, the why behind the exit, too. When you closed the trade, what were the thoughts? Was it hit my profit target or hit my stop loss? Or was it, oh no, it's pulling back, gotta get out, or I need to make back that last loss?
Got it. So if my journal consistently shows entries logged with filled adrenaline, saw price jump, entered fast, and exits logged with panic on pullback,
Yeah.
then I've got a pretty clear diagnosis.
Exactly. You've identified impulsivity, probably driven by FOMO and fear. Once you have that diagnosis, then you can move to the coaching phase and use the right tools.
All right, so let's talk tools. We've diagnosed the pattern. What's the first practical thing Steenbarger suggests?
The first one is really direct: pattern interruption. The moment you recognize that trigger, the feeling, the thought, the situation that usually leads to your bad habit, you have to physically break the chain. Interrupt the momentum before the destructive trade happens.
That sounds almost too simple,
Mm-hmm.
but powerful.
Yeah.
So if my pattern is taking stupid risks after 2 losses in a row,
Then that second loss is confirmed, you don't even think about the third trade. You interrupt.
how? Like, what does that look like practically?
It needs to be physical. Something to break the mental loop. Stand up, walk away from the computer, get a glass of water, stretch, step outside for literally 3 minutes. Anything that physically disrupts that emotional spiral. Because when you're stressed or angry, your brain wants to run down that old, familiar, destructive neural pathway. The physical action disrupts it. It buys your rational brain, your prefrontal cortex, a few crucial moments to catch up and say, wait a second.
Interrupt the pattern in the moment.
Oh.
Okay, I like that. Tool number 2 sounds like it's more about preparation, connecting back to that athlete idea. Behavioral rehearsal or visualization?
Yes, exactly. Top athletes constantly visualize success, right? They mentally rehearse the perfect performance. Traders need to do this too.
So before the market opens, I should visualize myself executing my plan flawlessly, seeing my setup, entering calmly, taking profits.
Yes. Visualize the perfect execution. Build that mental muscle memory for doing things right. And this is critical, Steenbarger really emphasizes this. You can't only visualize the wins.
Ah, okay. What else do we visualize? This seems important.
You absolutely must visualize handling adversity correctly. Picture a trade going against you. See the price hitting your predefined stop loss. And then visualize yourself calmly, without anger, without fear, closing the position exactly as your plan requires.
Visualize taking the loss correctly. Wow.
Yeah.
Why is that so crucial? It feels kind of counterintuitive to focus on losing.
Because losing is an inevitable part in trading. If the only time your brain and body experience the stress of a losing trade is when it's actually happening live, with real money on the line, you're far more likely to panic or freeze or do something stupid.
Ah, okay. Stress inoculation.
Precisely. If you've mentally rehearsed taking that disciplined loss calmly, you've already started building the neural pathway for the correct response. You're preparing your nervous system. It makes it much more likely you'll actually do the right thing when the pressure's on.
That makes a lot of sense. Build resilience
Mm.
before you need it. Okay, which leads us to the third tool, which feels like it underpins everything. Focus on the process, not the profits.
This is absolutely fundamental. It's probably the single biggest differentiator between traders who make it long-term and those who burn out. It's the core realization. You cannot control the outcome of any single trade.
The market's going to do what it's going to do.
Exactly. It's chaotic, unpredictable in the short term. You can have a perfect setup, do everything right, and still lose money. You simply cannot control the P&L on a trade-by-trade basis.
So what can you control?
Your behavior, your actions, your adherence to your plan, your process. That's the only thing you have 100% control over.
Okay, conceptually I get it. But practically, how do you? How do you actually do that? It's hard to ignore whether you made or lost money today.
You don't ignore it completely, but you shift what you use for your primary evaluation. Your daily or weekly report card isn't based on your P&L number.
It's based on.
It's based on how well you followed your rules. Did you do your pre-trade research? Yes or no? Did you wait for your specific entry signal? Yes or no? Did you use your planned position size? Did you honor your stop loss without moving it?
So you grade yourself with a checklist on process execution.
Exactly. You create a checklist for your trading plan's rules, and you grade yourself on adherence. You might have a losing day in terms of P&L, but if you followed every single one of your rules perfectly, you give yourself an A for the day. You executed professionally.
And conversely, you could have a winning day, but if you broke your rules, chased a trade, got lucky, you give yourself a poor grade.
Absolutely. Because that reinforces bad habits, even if it worked out that one time. Focusing on the process builds sustainable skills and confidence. Focusing only on the outcome leads to emotional highs and lows, superstition, and ultimately, inconsistency.
When you focus on the process, you're focusing on something you can actually master.
That's the key. Mastery of self, mastery of execution. That's what compounds over time, much more reliably than searching for the next holy grail indicator.
You know, this whole deep dive into Steenbarger's work feels incredibly empowering. It shifts the blame game away from the market or the broker or whatever.
It really does. The message is, you're not doomed to be a victim of your emotions. You don't necessarily need years of therapy to trade better.
Success is an inside job.
Absolutely. It comes from discipline, building good routines, treating trading like the high-performance profession it is, and actively coaching yourself or getting coached on behavior.
So the path isn't about finding some secret outside of you. It's about becoming a really dedicated student of yourself, observing your patterns, accepting the difficulties, and always looking for those practical behavioral solutions.
Right. And when you do that, you start to turn what might feel like your biggest weakness, your own psychology, your emotions, into potentially your greatest strength, your most reliable edge.
That's a powerful reframe.
It is. And it starts right now. So maybe a closing thought for everyone listening, something actionable based on what we discussed. Use those coaching questions. Think about your single biggest, most destructive trading habit, the one that costs you the most. Got it. Now, really dig deep and identify the last 3 times you didn't do it. The exceptions, what were the circumstances? What did you do differently those times?
The times you resisted the urge or followed the rule.
Exactly. Those exceptions aren't just feel-good stories. That's your roadmap. That's your immediate practice plan. Your job this week is to figure out how to replicate the conditions of those exceptions. Start there.